All right, what's up everybody? Michael Lamar here from Wall Street IO, the #1 backtesting platform for swing traders, with a quick update for you on Apple. Today we're going to answer the famous question in the market: which indicator actually works better, the MACD or the stochastics? We'll take a look at both of them today. I'm also going to give you my longer term monthly and shorter term daily analysis here on Apple. Let's start with the monthly. Okay, if you remember, a couple weeks ago we had posted a chart and a video asking the question, are we early cycle or late cycle with Apple? Let me go ahead and go through that again really quickly. Early cycle is basically when you're getting in towards the bottom side of the channel. Okay, this is generally thought of as a place where the risk is smaller because you're getting in after a big pullback, and once it's had time to kind of time correct, generally where we start to see bottoms. Late cycle are the top of the channel. Okay, so if I was to basically break up this longer term channel with a support here and a resistance here, if I was to break it up into quadrants, let's say, right, you want to get in the lower quadrant of the channel and out in the upper quadrant of the channel. So let's go ahead and do that. I'll go ahead and put one right down the middle. So here's basically the middle of our trend, right? And if I was going to put a couple more here, there's the upper quadrant, and here's the lower quadrant. So basically breaking them into four channels, okay? Now, if you get in towards the first quadrant here, generally, again, there's less risk. You usually have more potential upside because the stock can then travel from the lower end of the channel all the way to the upper end of the channel. Currently, we're basically near and at the upper end of the channel currently. So again, we're a little late cycle here. That doesn't mean that Apple can't continue up a little bit more, maybe to 200, maybe beyond. We'd have to basically break above this longer term channel in order for that to happen, but I did want to kind of highlight that for everybody. We are fairly late cycle still. Okay, so let's go ahead and look at the daily chart. Now the good news for the bulls is that we're basically holding the 190 level, which is an over-under area. The bad news for the bulls, we have not been able to get above and stay above the 192.5. And if you remember from last week, those were basically my over-under areas currently for Apple. 190 on the downside. If we break 190, I think 185 is probably the target, maybe a $5 move down. If we can get above 192.5 and stay there, could happen this week, but we'll let price determine that. I think we're going to 194, 195, maybe even as high as $200. We do have earnings coming up, and I'd like to see a move before earnings, but ultimately the price here is going to determine the directionality. Right now we're extremely neutral inside of this band. Okay. I also want to highlight for you the MACD currently. MACD is currently crossed to the bulls, which generally has gives us longer payday cycles. This has not really been the case this time around. We're still getting shorter cycles. I think that's more commonly the case when we have compression or time compressions like we're seeing now. Okay, for the bulls, we still have this moderate up channel that you see here. Okay, so we're still kind of moving up in the long term, right? We're still moving up. And again, we're still holding 190, but if 190 breaks, considering where we are in the daily channel and where we are in the monthly channel, I would have a little bit of caution. Okay, if 190 breaks. If it can hold, I think we're probably going to new all-time highs. I would hope to see that before earnings, but again, we'll let price determine that. Okay, I want to show you really quickly seasonality, because seasonality for July is oftentimes good. You can see July on average over the last 10 years is the best month of the year. That changes slightly if you zoom into the last 5 years. July and August are usually pretty good, but not as good as February, May, or October. Okay, so let's jump into swing trading at Apple. Two common indicators that people use that both of them work, and those are stochastics and the MACD. So what are the indicators and what are they good for, and which one is better? Let's go ahead and answer that question for once and for all. Okay, so I'm going to go ahead and open up Smart Studies. The Wall Street IO team and I have built Smart Studies to allow people to backtest basically any indicator that they put on their chart, or at least the most popular ones. So why don't we go ahead and start with the MACD. And because the MACD is a longer indicator, we're going to use a 3-year for that. So what I'm going to do right now is I'm going to kind of zoom in a little bit, maybe a little too far. There we go. Now on the left here, you see the results of the MACD. So we're looking at the last 3 years on the MACD. You can see that the MACD is now on our chart, and we're looking at the results of the MACD. So over the last 3 years, it's been a profitable strategy the MACD has. 14 wins, 9 losses, so good batting average, and a really good risk reward in the average win which is 719, and the average loss, which is only 339. So because the average win is over double the average loss, you have a pretty good strategy. Now, these are longer ones, 22 days on average over the last 3 years. What that means is it lasts about a month. These are trading days, not calendar days. I figure about 22 to 23 trading days in a month. So the MACD is really a longer term monthly strategy. Let's compare this right now to the stochastics. All I have to do is open up Smart Studies. I'm going to get rid of the MACD, and I'm going to load up stochastics, and I want to do this over the same time frame. Okay, so the MACD has a strategy that lasts about a month. The stochastic has a strategy that lasts only about 6 days. Okay, so it's a much faster strategy. It's also been profitable for the most part over the last 8 to 10 years. The batting average is not as good over the last 3 years, 39 and 50. But what makes it profitable is the average win and the average loss. You can see the average win is 380 and the average loss is under 2. So you still have a pretty good risk reward. It's a much faster strategy. Okay, over the last year, it's done even better. Okay, so if you look at the stochastics over the last year on Apple, we actually have 13 wins, 10 losses. The batting average becomes better. And check this out. This is really important. The average win jumps up a lot to over 5, and the average loss is down near $3. So I think the stochastic strategy has actually improved over the last year. That tells you a lot about Apple and the market in general in the normal weekly cycles. Okay, now I want to introduce you to one more strategy, and that's the payday cycle strategy. Okay, so I'm going to click that to get rid of stochastics. I'm going to load up payday cycle. The batting average here is about 50-50, but if you look, the average win is 4.5, the average loss $1.90. Okay, so here's one of the biggest differences between the stochastics and the payday cycle. You're going to have more trades with the payday cycle, but the batting average is not quite as good over the last year, 50-50. But what I like about the payday cycle is the average loss is under $2. Let's compare that again to the stochastics. $3. Okay, both of them last about the same, about 6 to 8 days. Okay, so the payday cycle strategy actually has a smaller amount of risk, but the stochastics has a pretty good win rate over the last year. So all three of them are good. Now here's the determining factor really, because all of them have been working well with Apple. The biggest thing is frequency. How often do you want to trade? So when people say, hey, Micah, what's the best strategy for Apple? I will normally say, well, how often do you want to trade? If you want to trade once or twice a week, stochastics or payday cycle is a pretty good strategy. If you want to trade once or twice a month, the MACD is a better strategy. So it really determines on your preferred trade frequency. How often do you want to trade? And that's a little bit different for everybody. Okay, so I went ahead and showed you 3 strategies, the MACD, the stochastics, and the payday cycle. Stochastics is basically trading whenever it crosses down here. You can see that initiates a trade. MACD is the same thing, right? Because you just got these 2 lines that cross, and every time they cross, like this one, you initiate a trade. Payday cycle is a little bit different because we're using the Heikin-Ashi candle. Okay, so to initiate a trade on the payday cycle, you need these Heikin-Ashi candles, and essentially what we're testing on this one is how well would you have done if you would have bought on the first green payday cycle and sold on the first red one. Again, very, very good and very profitable over the last year for Apple and many others, but it's important to understand which of your indicators work, which ones are better for different time frames, and what are the risk rewards and risk and profit potential associated with all of them. Each one is going to be different, and again, the biggest difference was how often do you want to trade. Remember, at Wall Street AO, you can backtest the most popular indicators instantly on all 8,000 stocks and ETFs in our database, which means that you can backtest it before you trade it. Let me know in the comments right below this video what the biggest aha moment was for you today while I was backtesting the MACD, stochastics, and payday cycle strategy. Let me know any aha moments you had in the process of backtesting or analyzing those strategies, or in the difference between them. Let me know in the comments. I appreciate it, and I'll reply back to each one. And if you're not yet a member of Wall Street AO, I wanted to invite you to join our community. Go ahead and click the sign up link at the top right of this page, and you'll get instant access to the Smart Study backtesting tools I used today to backtest and analyze Apple stock. You're also going to get access to the ability to subscribe to these strategies and get notifications for when they start and when they stop. You also get access to our community, all of the courses in our university, and access to live meetups throughout the week as well as our live trade room. I really hope you enjoyed this video, and I look forward to seeing you in the next one. Trade safe, and I'll see you on the inside.